Cryptocurrency enthusiasts have shown up in droves, over 8,500 people at this year's Consensus Conference compared to 650 that attended back in 2015. And it's been a wild event. Marketers seized on the event, showcasing Lamborghinis, a favorite symbol of crypto wealth. There was even a parody protest organized by Bankers Against Bitcoin, a tongue-in-cheek way of reminding people of the disruptive force blockchain could be for Wall Street. Now, on a serious note, St. Louis Fed President James Bullard spoke and did not bash Bitcoin. Instead, he acknowledged that digital currencies are here to stay, though he does not think Bitcoin is a threat to the U.S. dollar.
We think blockchain technology is very interesting, and of course there's been a lot of new issuance of cryptocurrencies, so we're keeping an eye on that. So we want to be very engaged and thoughtful about as this proceeds.
Still, noteworthy investor Barry Silbert sees more money going into cryptocurrencies.
Has finally discovered crypto, and I think there's a tidal wave of capital that's about to flow into this asset class.
And as if on cue, HSBC making news, announcing its first trade finance transaction using a single blockchain platform, which involved the shipment of soybeans from Argentina to Malaysia. So we're slowly starting to see more companies put blockchain to use. Melissa?
All right, Seema, thank you. So the question here is Wall Street starting to warm up to crypto? And Dan, we've been at a couple of Credit Suisse blockchain conferences, and James Disney over at Credit Suisse always talks about how the firm is looking at ways to use a blockchain in order to save time and actually save money.
So there's so many things going on in crypto, blockchain, and when you think about like bankers and the guys that I speak to, especially guys like James at Credit Suisse, they're thinking about how they can advise companies to use this technology to kind of disintermediate certain processes that are going on, to cut out middlemen, that sort of thing. So to me, that's really what's very interesting right now about blockchain. That last bit they just said, you know, it's a logistics thing. It wasn't wasn't a crypto trade of soybeans that, you know, to Malaysia. It was tracking a shipment.
Right. That, and it could also disintermediate letters of credit. IBM and Maersk have a JV already.
And that's really where we've been grappling on this desk. And I think people are trying to look at companies and drop in a blockchain framework and how it's going to change their business. I mean, bottom line is it's going to bring some companies to the center of their industries. There's obviously industries building around it. But for now, unfortunately, we're not really able to see who's doing what. And I think playing this on the stock by stock is really, you know, I think there are people that are out there doing that, but I think the best way to do it is look at the people that are changing the landscape on the inside.
All right, let's bring in Arthur Hayes, the co-founder and CEO of BitMEX, the Bitcoin Mercantile Exchange, which is the largest crypto trading exchange by volume. In a former life, by the way, he was a top trader for Citigroup. So, Arthur, it's great to get your analysis here on the subject. Welcome to the show. So tell us a little bit about BitMEX. You deal primarily with institutional traders, correct?
No, we deal primarily with retail traders.
Retail,
in North Asia. So our premise is that we want to give access to financial products to retail investors around the world using crypto, and right now that's Bitcoin. And so we offer highly leveraged derivatives, 100 times leverage we offer on the Bitcoin.
100 times leverage.
Correct. And our perpetual swap product is the most liquid trading product around the world. It does about 3.5 yards a day of flow. Okay,
so when we say it's by volume, it's because you're dealing with the retail trader, correct? And so they're presumably not trading the volume, the dollar amounts that institutions are.
Well, there's really not that much institutional presence right now in crypto. It is a retail phenomenon.
Are you equipped to handle institutional trades once that floodgate starts coming in, as so many people are predicting?
Absolutely. You know, we have an API, people can code against it, and you have a lot of prop shops and algo guys who've joined in because it's volatile, there's negative correlation to a lot of other asset classes, and they actually trade against real humans instead of robots all day.
The New York Stock Exchange just announced recently that it was going into also cryptocurrency trading, settling trades. And one of the biggest pieces was the custodial aspect. You have that figured out, though, correct? You have.
Well, we hold Bitcoin. We hold a large amount of Bitcoin. We have certain processes that we believe have made us safer than others in certain ways we do things. But at the end of the day, you still have to take that risk if you want to trade.
Do you think that there's a risk, Arthur, you just said 100 times leverage, and it's retail, and that's something that we know has been a real problem, especially in risk asset booms, right? I mean, how do you arrive at 100 times, and what's suitable, and is that something that is transferable to the United States? You said you're in Asia right now.
Yeah, so really it's a headline number. Most traders do not use 100 100 times leverage. So last time I checked, it was around 8.5 times leverage. So a lot of people use that as a testing ground or almost like a free option, if you will. I think the price is going to go up in the next 10 minutes. Let me place a little trade. If I hit it, great. I made 100% ROE. If I don't, I just lose my initial margin. So it's limited liability from the perspective of the trader. So unlike, you go short XIV and you get carried out and you got to sell your house, on BitMEX, you just lose what you put in.
Arthur, kind of thematically, you talked about Asia, and clearly there's a ton of volume, and some are arguing that's 2/3 of the market. Why is that? And what do you see in terms of the U.S. retail presence in crypto in the near horizon?
Well, I think Asia dominates crypto because they're very used to trading digital assets. So take South Korea, for example. They've been trading digital goods related to video games for almost 2 decades. So when you move to a purely money-based digital currency, they understand that culturally, and so they grapple, get on board quickly. Take that to the West, where you have a very established banking system and things work pretty well. Why do you need to go out and find a new way to trade or a new way to do things? You have, a broker that offers you options, futures, all sorts of different products. So you move that into the developing markets where you don't have these type of products, and you see people who are a lot more interested in it.
You've got a stunning Bitcoin forecast. Where do you see it going?
50,000 by the end of the year.
By the end of the year?
Correct.
Now, in January, were you a little bit wobbly about that prediction?
No. It's my job to make predictions. Whether or not they're right or wrong doesn't really matter to me.
Oh, so you acknowledge them. You might be totally off base.
Arthur, welcome to the show.
You could be one of us, I guess.
Why is that?
Well, I'm a volatility trader at the end of the day. We make our money if it's volatile. If it goes up, if it goes down, if you have Bill Gates calling it a fraud or we're harvesting babies, great. I mean, short it. I don't care. Or if you think it's going to be $1 million in a few months, great, buy it. Still don't care. We just match trades.
Arthur, hope you'll come back.
Thank you.
Fascinating to learn about your business. Arthur Hayes of BitMEX.
Just match trades. I mean, it's interesting. Dan made the correlation between, and it's a great business, I'm sure they're killing it, but he made the correlation between is now gambling being legal going to hurt? I mean, in a lot of ways, what you're doing there, you're the man, I'm not bringing the guest back, but he's the middleman of people gambling, basically, which is fascinating. Right. And again, don't underestimate
as long
people's
as the transaction happens, you make money.
So here's the irony. One of the reasons why crypto traders love it is because they're inefficient markets. There is enormous volatility, and there's been a lack of price see-through. And that's how you make money, or at least that's how you can make money, as long as you're on the right side of the trade. So if you think about institutional players getting involved, that should start to go away in a regulatory environment. The efficiency of these markets should be enormous, and a lot of people who want blockchain don't want it for the volatility. And you call store of value this and that. That's one of the big debates that's out there.
Tell you what I loved hearing. Arthur's a brother from another for me right now, and for you, I hope, because the whole idea of this being a derivatives opportunities here, and your limited risk to buying something that you think is going to go fly into the upside. I mean, it's the options world that we work in right now. With liquidity.
I'm kind of more in Tim's camp. I mean, this is my very solid belief that it is gambling that doesn't have regulatory framework, and we're just talking about gambling that's existed forever.
And people want
sport.
that.
I know, but I think right now when you're thinking about the volatility, there's a lot of stuff going on. Remember stock trading before Reg FD, that sort of thing. There's information arbitrage that's going on, and I think there's very few people that have all the information in the crypto space right now. So to me, I think it's
still true.
Well, I'm just saying, it's a bit of it's a rigged game. Okay, so we could never go out to somebody and say you should trade at 100 times leverage, and even if you're risking what you're willing to lose, what are you basing it on? A feeling, a gut? You wake up this morning, Bitcoin's going back above 10,000. I don't know, maybe.
Well, and it seems to me, and Arthur didn't sound like he was that convicted to call it 50,000. He cares more that there's enormous volatility in a sector where his company is well positioned to do it. But that almost seems to be the story. The story is that at least for a couple of the core vehicles that people can play that trade actively, let it rip.
He sucked me in right away.
Maybe part of the story is the picks and shovels as opposed to the end product.
That's the
right.
Way
I mean, in terms of investing in this space,
he's got the picks and the shovels.
Right.
No, but he's not mining for gold.
He's
not mining for gold. He doesn't even care if it gets to 50,000.
Yeah, but there's no exchanges in the U.S. that are allowing people to do 100 times leverage for good reason. They know that our regulators would be all over that in a half a second.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.